Hey, yo, what's going on, Chain Gang? Tonight I'm going to be going over some research that I had my AI come up with. I want to get into the habit of doing this and also talking about my website, my business, and where it's at. So, let's begin. First one is the Senate advancing the crypto market structure bill, which is actually really good news. Uh, the quicker that they can get this done, the better. And even if that means a little bit of compromise, uh, if we, and the compromise part might actually even be a good thing, because the longer that these regulations go on for, the more they're just figuring out how to get a hold of the the global market essentially. And I don't think that that's fair considering where we're headed as a global species. I mean, anyways, I'm kind of getting off track here, but the first story sets the tone for everything else that we're about to go through because it's not just another crypto bill headline. It's how the U.S. Senate is finally moving forward on a long-term delayed attempt to define actually how the digital assets uh, are going to function. And the Senate Agricultural Committee advancing on the crypto market structure bill is actually quite significant because it's trying to end the long term tug of war between the SEC and the CFTC by giving the CFTC a much clearer authority over these spot crypto markets. The bill also attempts to protect the self custody and also the non custodial software models while placing the more heavier compliance and burdens on the centralized intermediaries, which is actually very bullish for the entire global market system that's coming to fruition. For the everyday people, this matters mainly because the uncertainty is very expensive when you think about Bitcoin and where it's at. When the rules are unclear, the platforms will tend to be more restrict than they need to be, and the banks tend to do more de-risking than they probably should or need to. Um, and also, the users get sometimes things can happen to people's bank accounts, from what this monologue is saying. And what is this actually saying? I'm sorry. So it says here, and I'll read this word for word. I'm not sure exactly how to read this through the monologue, but it says here when the rules are unclear, platforms over restrict, banks de risk, and users get locked out or frozen out just in case. And I really don't know what that's implying to probably something before like centralized intermediaries. I don't know. So people are feeling this as a lost access. People are feeling that as lost access, higher fees, fewer options, and more fear around anything crypto related is the norm for right now. On my website, this leans bullish, it's saying here, because it is non custodial. It's talking about a trading bot. The proof based structure fits exactly into what lawmakers are saying, what they want to protect, which is the base, the base software, the transparency models, and also the user-controlled rails, rather than the opaque intermediaries. Um, I'm just going to read this last part here. So zooming out globally, this reflects a much slower but a very real shift away from the discretionary enforcement towards formal rule setting. Um, so what does that mean? This is how systems mature when power is no longer centralized to one country or one gatekeeper or one currency. You know, let me. So basically, what it's talking about is something like this: um, non-custodial, meaning that I never ask for any private keys. Um, and or see, and that's the main. If somebody tries to ask for like a private key, that would make the most sense. But if somebody asks for your seed phrase, that's like a red alert. Nobody should ever ask you for your seed phrase, right? The private key is the technological version of like holding somebody's routing number or account number, but it's like you actually have control, and that's like where you get into being a custodian of somebody's funds, which are a lot of platforms like BitMEX or ZoomX and all these BEMX and all these different platforms. They're more custodial, meaning you send funds to them, to their wallets, and you do business through their systems. So that's more of like a money service business model. Um, but like the regulations and stuff aren't really going to be affecting the regular people like me who are doing the non-custodial thing. So I mean there is a drawback to this. It is manual trading. Like it's not automated. Um, so like you would I guess I should rephrase this. It's not necessarily a bot. It's um let me ask AI. Because I use a non-custodial model for my website, it's not necessarily a trading bot, at least in the typical sense where it would do things automatically. But people can set different settings and it does build trades. So I'm trying to just figure out how I can market it, not necessarily as a trading bot, but something more suitable. Let's see what it says. That's just a bit too long. I don't know. Those names are too long. I'm looking for something more catchy and straight to the point. Entry craft is pretty good. Entry craft. for flow desk. All right. So here's what I'll do. Well, I don't want to do that just yet. I'll wait on that. But I'm going to rebrand this probably to something like Flow Desk. I think that's like Flow Bonk or Bonk Flow. I think I don't know. Yeah, lots of good ideas. But getting back to the story. So, the second slide here, the tone shifts from regulators. They have started to change. The SEC and CFTC leadership is signaling that the 2026 is about access with guardrails. This marks a very meaningful rhetorical pivot. Instead of framing crypto as a threat to be contained, the regulators are increasingly framing it as infrastructure that must be supervised very responsibly. And if you can see on my platform, let me just show you. If I go to my website, let me close out of that. There we go. You can see there's this sort of community progress. So I'm trying to make this as transparent as possible. When somebody who interacts using the blockchain and uses some of the features, those rewards will end up here. So we can see the distribution targets of each. I'm actually going to be redoing the amounts here. I'm going to be essentially, I think like this will stay the same, the 5.1 billion to the liquidity providers, just in case if something were to take off with that. Um, but it is a primarily a reward system, and that's what you see here. People will be using the discount feature, and you'll see the SVT tokens that have been burned, and you can see as an example 109 SVT burned, and that was me testing it quite a few months ago. I've been trying to keep up with the price of silver and trying to just watch the markets mainly for a while and see where they're going before I continue to work on the website here. But the website does function quite nicely. I can log in here for, well, I'm going to test this another time. But from my knowledge, the website is still operating as intended. It accepts all forms of payment. I have to log in before I go live next time. That way I can kind of do more stuff as the admin account. But yeah, so if you're taking a look at the prices of stuff, I haven't covered really the price of silver in about a week or so, or a couple of weeks now. It froze at $85.23, around 30 cents. It was quite the substantial drawback. I was actually talking to a buddy who was making some bad plays on it all. But anyways, let's continue on with these stories. So the regulations are including clearer disclosures, especially around stablecoin reserve standards, as well as the defined boundaries around what constitutes as a yield versus payments. So for the everyday people, this is shifting. Um, this shift matters because it reduces the constant background anxiety of what will or what this or will this be banned next? That's the question that this is sort of trying to answer. So when the people are feeling the rules are coming down on them, even the imperfect ones, they're more willing to engage cautiously rather than avoid the space entirely. So for my business, this is very bullish because its model, it says here in the monologue, it says does not rely on financial engineering, leverage, or even yield promises, which is very true. My business can survive completely outside of the tokenomic system that um, is the reward system that I've built. So my business relies on clear exchanges, the digital actions for physical silver, and what it's referring to is this here, the silver redemption system, and you can learn all about how it works just like that, even without an account. If I scroll down here, you can actually see the platform redemption progress. It shows live progress. So when this reaches one of the redemption tiers, which is 10,000, 25,000, 50,000, or 100,000 redemption points, these amounts of silver will automatically be deducted from the available inventory. And so when somebody tries to buy silver, it'll depend on who buys first. That will deduct the redemptions amounts. Uh, and this is like universal, so it shows everyone's, and it'll deduct based on everyone's. So the system will catch up automatically for previous, like a first in, first out basis for the redemptions system. Got to make sure that that's working correctly, but I believe that it is. I know that it was appearing to work in the admin controls. Now, what was I looking at here? So on a global level, this article or this slide here, slide 2, is showing that institutions are adapting to reality. The decentralization isn't disappearing, and they're realizing that. So the power structures are now trying to shape what they've built around it instead of denying the fact that it exists. So now, while the lawmakers are arguing about the frameworks, there's something much more quieter happening in the background, but also more important um, on the infrastructural side, particularly with Solana. The third story, or the third slide here, shows that the real world assets on Solana are surpassing $1 billion in value. It is driven by the tokenized treasuries, funds, and also now even the United States stocks. And that growth happened even while the Solana's price corrected very sharply. And that is a key signal. It means that the usage and settlement are being decoupled from the speculation. And for the normal people, this matters very much so because it suggests that blockchains are starting to behave less like casinos and more like actual infrastructure, the boring, reliable, and useful pipes underneath our houses, you know. So the lower fees and the faster settlements, but also the simpler payment experiences are the difference between something being theoretical and also something being actually usable. Now, for my business, this is strongly bullish, my monologue here is saying, because Solana's efficiency directly supports the non custodial payments because of its speed and efficiency. And the microtransactions that are tied to real goods like Silver Shot, or even features like discounts. Globally, this is a shift in power from price driven narratives to now utility driven systems on real functional blockchains. And this is historically how durable monetary infrastructure is built. And that's what slide 3 is explaining. So we're shifting towards more utility driven interactions for our monetary system. And that brings us into the fourth slide here, which is the silver inventories. Because the digital infrastructure, it's maturing, and the physical world is also getting, you know, used up. We're using up a lot of our resources. A lot of time has passed already, it seems, in the industrial revolution. And the COMEX inventories are falling to multi-year lows. And the COMEX is basically precious metals markets trading that is supposed to deliver on its precious metals, and that's why it's saying that the inventories are falling to multi-year lows because of these surges in prices, and it's showing that people are valuing the actual stuff that they can hold more than just the simple promises they've been fed for many, many years. Let me grab a drink real quick. If you're new here, please subscribe and check out my website. That'd be much appreciated. So the COMEX inventories falling to multi-year lows is basically a sign that the metals are leaving the vaults. Like I was just saying, people want the actual stuff in their hands rather than just the promises they've been fed. And that's not just changing the ownership um, in the real world in like the physical sense, but also in the paper markets. And that's why you're seeing these price fluctuations so insanely. This is the 2 hour, this is the 1 hour, that's the 15 minute, and this is frozen this last, Friday. And it's, it came down quite a bit. Help me let's take a quick measurement here. Came down a whole 36%. Insane. Actually, was it more than that? I think it was. It's actually like 38%, 40%. It's something crazy like that. And yeah, so that's showing up in the paper markets. And for the everyday people, this is also showing up as higher premiums for certain goods, longer delivery times, and also a growing sense that the paper prices don't aren't exactly telling the entire story of what's going on. And for the higher premiums, they're just talking about the premiums for precious metals. Because even I do this on my website. If I show you here, down here at the bottom, the premium is currently $5.97. This was at like $8. So this is like $2.03 cheaper. I should have it track the all-time highs and lows of the premiums because this is auto adjusting in real time based on the price of silver. But that just shows you an example of what they're talking about as higher premiums. Now, people may not follow the COMEX reports all the time, but they do notice when the physical availability of silver tightens because of what happens in the markets and basic industrial demand and stuff like that. So for my business, I would frame this as bullish as well. That's what it's saying here in the monologue, because its entire value proposition, my business's value proposition, is built around the actual delivery of the real metal in the form of silver shot. And if you don't know what silver shot is, it's basically just granules of fine silver. It's a very pure form of silver. Um, so that's what a lot of refineries are very happy with to accept as well. And it's not like some paper exposure. I mean, even when you go to redeem for the real stuff, it will, it'll be mailed to you like an envelope, little package. And that's important because that's what people want right now. It just sucks too because I haven't had my first customer, and it's sad. It's actually kind of sad that I haven't had anybody buy silver from my website and all this craze. Even when I was tweeting about my business and selling silver almost a year ago, like 8, 10 months back in June, I was tweeting about it and starting this whole journey that I've been on, but not a single customer. I did have people that tried to gain access to the tokens. But I had to put a stop to that because, well, regulation, control. It's like currently my business operates only within the United States. So I need people that are within the United States to have ownership of the platform and what I offer here, just for now at least. In the future, that might change. Could open up to the rest of the world, but the reward system does have a limit to it. There's only 10 billion tokens, and there will be a point when my business model itself will be sort of a scarcity. Like these targets will be met, and once that happens, the life cycle, I would say, of the token would have to like be bought back in or something at that point. Like I would have to rebuy. Like I would have to accrue my own tokens again at that point, which would be interesting. But that's like I can't expect people to be spending, you know, I don't know how much money they would spend writing books on my platform. But that'd be really cool to have people creating accounts. Does anybody have any questions? No? There's nobody watching. That's really sad. Anyways, y'all, there's a much broader erosion of confidence in the financial system, and that's what we're seeing here. And it might come back, it might be temporary, who knows? But on the global sense, um, it's definitely showing that the business I created was good in theory. Maybe, I don't know, maybe I'm just not doing it right. Let's move on. This next story, it is taking the tension and turning it into something a bit more volatile. Silver's parabolic rise to triple-digit prices, followed by a historic one-day plunge, wasn't just any market drama. It says here that it exposed structural fragility, that um, the futures markets did its own move, but while physical precious metals premiums and offtake remain elevated. What does that mean? It's hard to read this at times. I need to work on this. I'll just read it at face value. Y'all can take what you want from it, but it says here the futures markets whipsawed while physical premiums and offtake remained elevated. I don't know what that means, but the analysts are calling this a great divorce between the paper and physical markets, and they aren't exaggerating. For the everyday people, volatility like this is destabilizing. It reinforces the sense that the markets are no longer a smooth price discovery mechanism, but the pressure systems are prone to a sudden release. For my business, this is very net bullish because even with the short-term noise that's going on, because volatility pushes people to ask a very simple question, do I actually own anything? The physical redemption of functions on my website answers that question very clearly. That yes, you can have a system that gives you the real thing and rewards you for actually using platform. Now globally, this kind of disconnect is signaling uh, a lot of stress in the legacy market structures. It says here that they were built for abundance, not scarcity. I just think that's kind of funny. I mean, I would like to ask it. Can you tell me how the legacy market structures were built for abundance, not scarcity? I'm just curious. I'm gonna ask that, and but after I finish out these slides here. Ah, I need to go to bed. I've been staring at the screen for too long. So gold has broken through $5,000. Let's see where it's at now. About 4,900. Just about. All right, give me one moment. So again, it's just basically saying the same thing. The dynamic trust here in the paper promises. And it shows up as anxiety about savings, pensions, and also the purchasing power of the dollar. Um, People are worried that essentially gold's gonna keep going up from here, which isn't good for the average day people. And when the central banks are hoarding a bunch of this metal, it's also sending a message that even if they never say it out loud, people should hold precious metals. You know, for my business, this trend is very bullish, even if nobody else is saying out loud, because silver historically follows gold's monetary signals, and its affordability makes it more accessible for the working class. Um, and on a much more global scale, this also reflects a de-dollarization pressure that's been slowly playing out for many years, and it's playing out in the tangible sort of reserves rather than, again, paper promises and infinite balance sheets. So that was slide 6. So the institutions are now moving away from speculative narratives and more towards regulated tokenized assets, the stablecoins, and also the settlement infrastructure. Crypto is becoming more or less about, or is becoming just more less in general about hype and the prices of things going up, and more about does this system actually work under a lot of stress. For the average day people, this might matter because the functional systems are going to change eventually. and those payments that people might be receiving right now might be different in the future. The same stuff that the same can be said about their savings, and also the access of those things don't necessarily depend on a permission system, but more like a permissionless system. For my business, this is quite bullish because its model sits at the very intersection of these trend models, which is tokenized rails, non-custodial control, and also the whole physical asset settlement movement. The global outlook on this whole slide is reflecting more of a rebalancing of power than anything, and it's moving away from the opaque intermediaries and more towards transparent systems that can be audited, and platforms like mine that offer redemptions of precious metals and proven trusted systems. Now, when we kind of step back here and look at everything, I will sort of end the monologue with this paragraph here. So, the regulation is slowly solidifying, and that's good news. That's what we want to hear. We don't want the regulation to drag on forever. We want clear definitions about how the infrastructure is going to move forward. The physical markets are um, becoming more scarce and hard to manage, and also the trust in abstractions is also eroding. How this shows up for the everyday people is a combination that creates uncertainty in the future, but also opportunity to reposition um, if you know the times that are coming. And for my business, this is where the world is sort of drifting to. I've had past streams where I've said that what's going on, as scary as it might be for the dollar, is sort of a gift to the business model that I've created. Now, I've said it, and I've heard other people say it. The price of silver right now, it being $85.30, it's really not good for anyone. It's not good for the coin shops because they're buying and selling with such high volatility that it's hard for them to actually keep up with the orders and the first in, first out systems that are very necessary to the precious metals business. Um, and this is structurally bullish for my business. Again, not because of hype, but because of the model and how it aligns with where the world is drifting. Tangible value, the blockchain sort of payment rails, and also personal control over your finances. And globally, this movement feels more like a quiet inflection point in history when you really think about it, and not necessarily a collapse, but instead a regrounding of human civilization and where the power is actually shifting. And it's starting to shift more towards the people's hands and away from the promises um, and the systems that were once backing the things. Um, they can now be held, measured, and delivered. And you can do this too. Anybody can create a business like I have, selling whatever sort of thing that they want. I chose silver because it was at a time somewhat affordable, not really affordable. I'm hoping it dips back down to like at least $50, or $40 would be really nice. But it's hard for me to picture a future where that's within range again. I mean, I could be wrong. Who knows what the market's gonna do when they open? We might see this just continue to be a downtrend, and the global power remains intact for many years to come. Um, you can ignore this. Let me just did that delete that? Give me a second. Okay. But yeah, this we'll have to see where this goes when it opens up tomorrow afternoon. But anyways, if you want to get involved with a real project with real utility, I've been building it for about half a year, little over half a year, since June of last year. About half a year. And yeah, it's been quite the journey. I'm really happy with what I've created, and so far it works. But yeah, I'm gonna keep my stream short, y'all. I really don't know what else to say. I'm gonna try to test this stuff live here in the future and talk more about my business. Before I end the stream here, I do see that I have two viewers. If anybody has any questions, I would really like to answer some questions if anybody has some. But yeah, check out my website. It's in a link in the description. QR code. All right, y'all. Well, have a great night.